What's going on, everyone? Gilman with the Wellthy Stocks, back with our weekly Apple update video, ticker symbol AAPL, where we take a look at how Apple stock traded this past week, key levels of support and resistance that we're looking at moving into the future, and we'll also take a look at some articles covering recent news, things like that. So you guys already know, if you enjoy videos like this, don't forget to hit that like button down below, subscribe to my channel if you are new, and comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there, and we'll get right into the video. So on Friday, we got a $2 drop, as we kind of talked about on Thursday, right? We did have a little bit of that downside. We got that. And so, you know, with that Friday fade, we saw a little bit of a pullback kind of across the board. NASDAQ was down a little bit less than 1%, 0.85%. Dow Jones was down 163 points, and S&P was down 0.66% as well. Nothing to worry about, you guys. Take a look at the S&P. We're still pretty darn close to all-time highs. You know, NASDAQ not too far off either. So actually, I would much appreciate a pullback because it kind of gets us ready for you know, the next leg up, if you will. And Apple, this is a typical story, right? We ran into earnings, we got blowout earnings, and then we actually pushed up in the after hours, which really surprised me when I made that video and we were pushing up in the high 130s, and then we talked about the sell-off that could happen, which is exactly what we got. Matter of fact, a little bit more than even I had anticipated. So Apple stock not doing too well. If you guys know, my covered call is at 131, which I'm pretty darn close to. So we'll talk about that a little bit later. But first, what I want to do is, I want to cover a couple things from Apple's point of view, some news and things related to that. So the first thing we're going to do, I'm going to bring in this couple articles here, and we're going to take a look at earnings report, right? So covered it in great detail. I'm not going to cover it again here, but I wanted to quickly touch base on it because it is a huge quarter for Apple, right? Everything was up. I mean, iPhone was up 65%, Mac was up 70%, iPad up 79%, wearables up 24%, and services up 26%. I mean, we're talking about a company, again, the size of Apple and as mature as Apple, delivering these kind of growths. Now, I understand that a lot of these growths were spurred on by the pandemic, right? I'm not saying that this is going to be kind of the norm for Apple moving forward, and actually that's what a lot of analysts are talking about as well, is hey, we're going up 60% now, 70%, 80%. That's going to make a year from now those comparisons look kind of bleak. I don't necessarily agree with that, right? I mean, I think I'd rather grow 70% and then grow 20% even, because then you're growing 20% on the 70% growth already. But hey, I mean, analysts have their own way of thinking, so we have that. So the other thing is this, right? I mean, we got Warren Buffett. They sold some Apple shares last year, still holding on to a ton. That's what I want you guys to know. They are still holding on to a ton. They have, as of the end of December, they had 907 million shares, which was $120 billion. So Berkshire owns 5.4% of Apple. This is talking about, you know, how great of a CEO Tim Cook is, how great of a company Apple is, and how he was kind of regretting selling some of the shares. But what I want to highlight here, I know a lot of you guys talk about, oh, you know, Apple is not doing too well. I want to just kind of take a second to tell you guys, hey, Apple was up 81% in 2020. That's absolutely unheard of for a company the size of Apple. A lot of shares did well in 2020, so if you were invested in the market in 2020, hopefully you made out pretty well. But just goes to show you, right, after a company goes up 81% in a year, it's not going to go 81% every year, right? Like, that's not sustainable. Historically, the stock market goes anywhere from 8 to 12% a year. So for Apple's case, that would be like the whole year, Apple going up about $8, $10, $12, right? So just kind of keep that in the back of your mind, guys. I know we get frustrated when Apple doesn't do so well, but historically, the market returns for the S&P 500 hover around 8, 10, 12%, right? Apple being a big part of the S&P 500, of course. The other thing I want to take a look at here is that Apple's App Store had 78% margin in 2019, which is absolutely crazy. 78% margins. That's kind of the issue right now, is Epic Games is going out and saying, hey, Apple's got a monopoly on the kind of ecosystem that they can run on iPhones, and Apple's coming back and saying, they don't really do anything. They don't abuse their market power. So just wanted to quickly kind of cover that, right? 78% margin in 2019. And as we saw, App Store has been a growing sector for them, which is absolutely great if you are a Apple shareholder. The last thing I want to talk about, you guys, is something that kind of was on my mind. So I figured, might as well kind of research this a little bit and see. It's always a good idea to kind of figure out what the next big thing is going to be, right? If you are investing your money somewhere, you want to invest it where you see a decent amount of growth. What does that mean, right? So let's say, for me personally, in the next 5 years, what do I think is going to do relatively well? EVs, right? Anything related to autonomous driving, anything related to LiDAR technology. Those are kind of what I'm looking at. So part of me was wondering, what is big tech going to do? Is it time for big tech to take a back seat? And the answer, for me at least, is no. And here is a little bit of why. This article this is currently on Seeking Alpha if you guys have an account with them, but it was published by Barron's, and it essentially talks about the FANG stocks, or FAM stocks group, which is Facebook, Apple, Amazon, Microsoft, Google. Typically Netflix is in there too. It's considered FANG. But anyway, they performed last year, better than anyone dreamed, like I talked about. Revenues were up 41%. Expanded revenues up 27% and aggregated $258 billion. And although there are currently no bargains, there's cases to be made that there are no better stocks to play the most important shifts in tech. You take a look at Microsoft Azure, right? You're covering cloud, 50%, 46 for Google Cloud, 32 for Amazon's AWS, which, by the way, Amazon's AWS is already like pretty darn up there. So the fact that they're only going up 30% is not something to worry about. And then you take a look at e-commerce like Shopify, you take a look at Apple. The company noted the guidance for Q2 could have been $3 to $4 billion higher if it weren't for supply constraint on Macs and iPads, right? So throughout the board, we've seen a crazy amount of growth happen in 2020, but this article talks about the potential for that growth to continue in 2021. And as we shift more and more into tech, potentially having that growth sustain. Now, I don't think, other than like the cloud sectors, which I think is going to continue growing, I don't think it's fair for us to kind of assume that, Netflix and Apple and all these big companies are going to keep growing at the rate they did in 2020. But again, I want to emphasize, if a company goes up 21% and then 25%, that's considered a good thing because they're beating growth. But what I want to look at is if they grow 70% and then they grow 20%, that's way better than growing 21 than 25%, because then you're growing 20% on the 70%, if that makes sense. Okay, so that's what I wanted to quickly cover. If you are an Apple shareholder, and one thing I'll say is, you guys, if you are building a portfolio, it is always a good idea to dollar cost average in. Don't buy all your shares at one time. That could work out wonderfully. If you bought, back here when Apple was 120 and rode that up to 135, great. But if you bought it, at 135 and it's at 131 right now, maybe you don't have any money laying around to additionally invest in Apple, right? That's why I personally always like to dollar cost average. Let's take a look at the 5-day chart real quick. And we'll see what we see. So actually, beginning of the week, Apple was relatively flat. We talked about this 135 level being a really difficult level for us to break. I talked about kind of the previous 7 or 8 days that we had tried to go above that, but unfortunately couldn't really hold those gains. And in the after hours, when earnings were announced, we jumped up as high as 139.50. Hopefully that wasn't one of you guys that bought it up here. And then we sold off and we kind of settled in 137. So my thought was, hey, we hopefully stay above 135, maybe pull back and then kind of take off again, or not take off, but consolidate and then push up. But clearly we got a pretty nasty sell-off all the way to 132. So not only did we give up the gain here in the after hours, we gave up more than that and then kind of tried to push up to 133s and then sold off all that and then some. So what do we have coming up from levels of support, levels of resistance? Well, first things first, you guys, what I wanted to focus on here, this bull pennant we got a breakout, took us all the way to 130s. And this is what I was talking about, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. 8 or 9 days where we struggled to break above that 135 level. So that's going to be a pretty tough one on the upside. RSI is looking pretty good at 52, but let's talk about key levels of support, key levels of resistance. So we're right at the 131.46 level. If we break below this, 130 is next. And if we crack 130, 128.54 is definitely in the books, in my opinion. On the upside, we got 132.52, which has held up as good resistance, and 133.45 before we get to 135. Again, that 135 is going to be tough. Not going to, sugarcoat it. It has been tough. It will be tough. So that's something to keep in mind. That 131 level has held up decently. So back test, right? That passes, but we've never really tested 130. So part of me thinks, part of me hopes, I really hope we don't go down to 130, but if we do, it wouldn't surprise me. What would kind of be sad, I guess, is if we go back to the 128s, if we break below 130. But again, definitely doable. Markets at all-time highs. A pullback can come at any given moment, and we should all be ready for that. My call, as you guys know, was I moved it from last week's 130 to this upcoming week's 131. So I'm pretty darn close to, potentially stop rolling it and actually get to take the profits on it after having to roll it for 3 or 4 consecutive weeks. But that's why I continue rolling it, right? I don't want to take a loss and close it. I also don't really want to lose my Apple shares, so I keep rolling it, hoping that it'll pull back, because ultimately every stock will pull back at certain points. Key levels of EMAs, right? We are right at that 21 EMA. So again, that's why between the 21 EMA and these back tests of the support, 131 could work. I'd like to see us kind of get back between the 133 and 135 level earlier this week, and that'll kind of determine what we do for the rest of the week. That would be my hope and goal, between 133 and 135 for this week. I think the upside on Apple stock, guys, right now is between 138 and 140, and I think the downside to Apple is kind of in the high 120s, between 126 and 128. So I'm realistically seeing it kind of trade in between that for a little bit, unless we see extreme movements or we see some crazy news come out. That's all I had for you guys today. Hope you guys enjoyed. If you did, don't forget to drop a like down below, subscribe to my channel, comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. Let's remember to be a bit better every single day, and until next time.